Hi everyone, today is Tuesday, May the 13th, and this is the Moneyball Morning Report for the Benzinga Pro platform. My name is Anne-Marie Band. We're going to run through these pretty quickly. Got a little bit of a late start today. What are we seeing? Overall, we had a giant gap up from the news, and where we are sitting now in the E-mini S&P 500 is a mere 25 points from the weekly implied volatility move. So this chart has really expanded into a lot of ranges. A lot of folks have trades on up here. They're short at this area. And I suspect because a lot of macro folks have been banging the drum on negative action, there are a lot of traders caught flat-footed in this event, and we can see that as price action has shallow dips and move up into higher edges holding support. So dips are definitely buys. We're following the volatility ranges. You'll notice I don't have the implied vol move for today. It's only $4. What is it? It's $40, excuse me. And so $40 from where we opened down here is right at 59. So it's up and over what the initial weekly targets were. Those weekly targets have been expanded, and from here to the end of the week, here being May, it's only come in about $13. It was 100 and some change. It's now 87 and some change. And so that puts us up here at 59.25 or so. So I do believe short sellers are in charge of the market, and short sellers buy to get out. So dip buys are the framework. We're far away from the 50 simple moving average. The opening ranges, as a refresher, remember, dips are buy zones, so you can dip into the short target, hit the short target, turn around, and begin to go long into the upper edges. This white line is actually a 50% retracement of the large high move that we had to the upside. Traders sat there for 7 hours before it turned around and started moving up. We do have the CPI this morning coming in at 8:30. We will be probably recording when that happens, so we'll see how that goes. For the ES, with dips being buys, if we come down to 5,842, we have stop action at about 58.36, and then it moves to the top of the opening range, which is 58.69. Probably going to battle a little bit there because the high of the prior trading day, which was Friday, is 58.76. So mark that one on your chart. It's going to matter probably if you're looking for short action. I'd be really careful here. A lot of the folks that tell us when they think the Fed is going to move rates, they moved out from September all the way back into December. And so that is another thing that says dips are likely buys. Do not do anything but look at the pictures because they're going to tell you what's going on. Let's go to the NQ. Same sort of thing happening. The implied move for the week is all the way down here at 20,688. If I look to the next one, did I already print that or no? No, I've got the bottom one. Let's replicate this. And then we'll bring it up here. What's the NQ telling us? Five-day move for the NQ is 400 points away from the open. That open was 20,954. And so 400 points away from there is 20,300 and some change. Matches the 50% range of the high of this gigantic move we had from high to low way back in the past on a daily chart. If you want to see what that looks like, what I've measured, that 50% area is way down here where we had that giant move. This move is off of the wave that marks the last swing low. Let me move this to the last swing high. That might give us a little more action. It tells us it's above that zone. I'm going to move this implied vol move so it matches our chart. I do like to do that quite a bit. Yeah, we'll do that there. All right, so you can see we've expanded well outside the initial moves from the measurement at the end of the week. That means shorts are caught flat-footed, folks. Well below here, I expect a big move in the Qs if we cannot lose that 21,000 number. Okay, so that's the wave that we're in right now. This wave right here, 21,000 is the high in the NQ. What is the formation? Dips or buy zones. We've got this interim low sitting here, and I want to, let me see what my arbitrary color happens to be here. Let's make that, whoopsie. Let's put it right there on the low, and let's turn that into, I don't know, something pale, like a gray. Oh, that's a pretty bright gray, actually, so let's make it a darker gray. All right, so that's the interim low, 20,817. If we lose it, we'll head back to 20,688. That's where I think we're actually going to go eventually, but not under this formation. We can see that momentum is dipped, but it went to extreme values in the overnight and now bouncing again. This is the first area at 20,996. Tells me that traders are probably going to see some price action argument in that zone. And if it breaks to the north, we've got ourselves an old implied volatility move at 21,177 on the upside. If we lose 20,817, we'll get back to that 20,688. Let's go to the YM. This is, of course, the E-mini Dow. We've got the opening range marked. Implied vol moves still really pretty far away because these guys move on a monthly pattern, not a weekly one. And so that implied vol move tells us there's some action. Now, look at how different this chart is in general. Okay, it is underneath the 10 simple moving average, above the 63. But we just bounced off of the interim low of Friday's trading, and that is 42,187. That means that the traders bouncing off of that level, they're likely to go into an opening hour from way back in the day. And if not, if it holds there, we are off to the opening range of the YM, and that number is 42,467. Higher than that, 42,543. We've got to get out of this noise. This is a very noisy patch. It could be very sideways. The CPI number ought to give the price action some sort of movement. Strong dips remain buy zones. So if it comes into some of these lower areas that we're watching, watch for that to
the market is open.
Sit in that space. So here comes the CPI number. It is a big bounce a really big bounce. And we'll see how it translates up into the edges near 42,455, or if it will reject the zone. Always better to give it a few minutes to digest. That's always the best thing. Let's go to micro Bitcoin. Doing a whole lot, moving very sharply to the upside. Not sure what to say about this one other than it is very clear dips or buys. The dip on Friday was really significant. If I'm about to take a look at something like the 200, let's see, simple moving average. Let's make that a 200. 200 is way down here, so maybe it is a 100. Still pretty far away. Buyers very intent on picking up Bitcoin. Implied vol moves finally expanding. This one is at 108,000 to the upside. Maybe a lot of sellers up here. Listen, I do not know what is going to happen in this marketplace. I really don't. I really, really don't. What I can say is strong dips or buys and run it into target. Don't hold on for a big, massive move. It could come, but you can walk it up. Right now, clearly above a flat 50, above the 10, above the 100. Momentum is very strong. The big wave that we had from the high on May 12th to the low, high and low on the same day. We just breached that 50% area at 103.67. We are now in the opening candlestick range of Friday. To me, that says we go to the top of the range. That's 105, and you can 105,000, and you can walk that up as you see fit. Dips, certainly buy zones. Let's go to oil. A lot of folks putting in oil curbs. That's pushing price action up. Now at the 62 level, that's a 50% range of the wave that began and ended on May the 12th. That's the one we're looking at. Bullish formations across the board, bullish momentum. If it dips off of $62.70, it could come in to Thursday's implied vol move, and that's $62.14. I want us to keep an eye on the weekly formations right now because there's so much intraday volatility. VIX is way down. It needs to go a little further before big companies start selling puts and buying calls in a strangle event to the upside. It's actually called vertical collar as we move up into that space, if they bought the VIX, that is. Otherwise, it's a bullish position that says, price action could fade. Right now, everything is by the dip. I don't know that oil is being run by as many short sellers as the rest of the broad market, but they could be. A lot of very big names are short oil, thinking that we really are on the brink of some kind of recession, and they're getting caught flat-footed on these formations. Friday's opening candlestick range is the support, $61.58. The opening range trade, $61.80. As long as it holds that edge, it's going to be bullish. You can literally stair-step it up. We are inside of Friday's move, which tells us a lot of things can happen. We can move all the way to the top of the range at 63.62, or we could come back into that area that I mentioned at 61.56 for the opening range high of yesterday. Very bullish formation sitting right there. Let's take a look at gold. Oops. Gold is the only one with a bearish formation, and of course we talked about the blow off top here. notice where it's sitting. This is the low implied vol move. Sorry, that is the wrong color. We are at the low of the weekly implied vol move. Notice we broke well through it on Friday's move and then began to stagnate. This big area right here at 32.16 is a big floor that I'm looking at that combines with this. Notice how choppy. Now the price action is coming into that implied vol move. What the traders who use data on these weekly moves, they expect gold to rebound. And so the dips in this area near $3,246 are buy zones. The risk is fairly wide, so you ought to do micros here. $10 move, right? That's 1,000 ticks. Okay, so that's a lot of motion. You want to use it on micros if you're thinking about going long in gold, because it easily could fade. The macro story suggests gold could fade even more. As you know, I expect gold to come all the way back down here at 2,959. I don't know when that's going to happen, but right here, where we sit at that 3,248, is a significant Fight Club event for the buyers trying to get themselves back up over this edge. Traditionally, this would be a buy zone with a dip just under that 10. We want to see it recover. If you want to take a trade there long, I would use micros, right? Because the structure is short action, and this is a bear flag into the 63 simple moving average. All right, let's get to SPY. Big spike up off of the CPI number, still holding that edge. Notice prior high right here at 583. Let's change this color. We know we need it to be another color because it is not a weekly implied vol move. Right, so we've got that gray opening range. We've got it here. We are really far from opening ranges of yesterday, our Friday's trading event. And so, you know, it's anybody's game. Right now, pullbacks are buy zones. We're above the 10. We're well above the 63. Something like this might make you want to collapse to a 15-minute price action event. Nothing wrong with that. You can absolutely do that. And if you've got your opening range formations, you'd want them to show in those tighter time frames. You can simply adjust that. Not going to do that at this juncture. Should price action come into 557 to 575, we've got ourselves a potential bounce zone, but I would wait until this structure defines itself. These are very big moves. They're very, very aggressive. And in a market like this, we have to prepare for potential intraday volatility. Listen, we could go absolutely full tilt long and it might work out and you'd be very happy. But if it doesn't, it's going to be a problem. And as traders say, it's always better to be wishing you were in a trade than wishing you weren't. And that's going to be critically important. I hate to be, bearish at all. I'm not particularly bearish. I'm just cautiously bullish. So we wait for these fade actions. We let them hold. And then we see how we run up the flagpole today. Normally, in this kind of environment, I'm not sure we've ever seen, but normally, when price action takes a massive spike, we have a day or two of consolidation. I don't know today. I would anticipate consolidation, meaning range trade, but if it breaks out, any dips are going to be buying formations. Here is the new implied vol move for the Qs as we take a look at the Qs. Right up here at 510. Again, these implied volatility moves tell us the following. It tells us when the traders have gotten it right and when they've gotten it wrong, what they need to do. So here was Friday's calculation for the week ahead. This was the high of that zone. The low of the zone way down here. Way down here. So this edge tells us, okay, they are sitting flat-footed on the wrong side of the trade, so they have to buy the instrument. They're going to try and push it down, but if they can't push it down, they're going to have to buy along with the broad market. This is the new calculation. They could have rolled a little bit in yesterday's motion, but they're still fighting the same battle if it gets up over 510. And if it gets up over 510, the next move, and we'll use the swing low to the lower swing high, that puts us at $516, and then the low to the high swing high, the highest swing high, puts us at 520. I anticipate that that's where this thing is running. It's also my range box, which covers those highs to lows. 50% of the range, very likely place for them to do battle. Big market day ahead. It could be sideways, but what we're watching for is how the traders react to these moves on the edges of the formation. My supposition, as I mentioned, is that we should try to digest these moves and fall back inside of the weekly implied volatility events across the board. Some of them are going to be very hard to do without a sharp move, and that, of course, is the NQ more than ever. Okay, so be careful. If you can, sit on your hands. If you can't, look at these strong levels and then rotate through them on the tighter time frames to find yourself price action. You see how it's bouncing at the top of the opening range and still holding, even if it gets to the bottom of the opening range, even if it gets to the low of the pre-market. All of that suggests buying. So I'm going to wait for the dips. All right, everyone. I'll see you on the streams.